thanks a lot, guys. So for those of you who don't know me, I do write a lot of the market commentary for London South East in the blog section. We also do a reflect and repair, and also like a morning news a news section as well for any guys who need to keep up with companies that they're often following. But keep an eye out on the blogs, because I do often talk about technical analysis and some of the stocks that I look at as well. And I would like to see, it's nice to see some friendly faces. And in regards to the presentation, it does get a little bit technical in the middle. So if you do have any questions, just raise your hand. I'd rather answer them straight away while they're fresh in your mind. But obviously bear in mind in future slides, you might get some of the answers to the questions that you have. So I'll let you know as and when that happens. So yeah, so stock selection using technical analysis. And I'll just give you a brief rundown about myself first of all. So I actually started as a desk clerk in an FX company. So I literally just used to process transactions, pass it through. And that was when I was a junior, so fresh out of uni or whatever. That was the job that they got me doing. Absolutely loved it. No, I didn't, but anyway. After that, I moved on to selling forwards and spots and options, and this was mainly in FX, but it was to equity companies, so companies that used to invest abroad. So for example, UK hedge funds or whatnot that are investing in mining companies in South Africa, Canada, Australia, how would they hedge out their FX exposure? And that really got me interested into stocks in general. Going forward after that, I worked for a hedge fund, so I used to trade index futures. And that was on a systematic basis using only technical analysis. So I used to develop, quite rapid trading systems. Only really used to take like 8 positions a day. I know that does sound like a lot, but in this market, that's not actually a lot. We also used to trade FX, but on a long-term horizon. And then I moved into analysis, so technical and statistical analysis. So I used to work for a company called Trading Insights, which a few of you guys might know. And this sends out reports to individual investors and high net worth individuals who do trade stocks, but kind of look at the macro picture in terms of what's going on in the world. After that, I moved over to Ranscorp. I don't know if any of you guys have heard of this, but this is like a real-time news service, and it breaks a lot of news to participants in the market, all asset classes. So in regards to shares, I did used to look after European and UK equities. And I used to have a mic pretty similar to this, and if anything used to happen, any fundamental stories used to break, we used to get them out to anybody who signed up to the service as quickly as possible. So it was really about people protecting their portfolios by breaking news announcements. And what I would say by this is it could be things that you might not think of, like hurricanes, it could be earthquakes, terrorist attacks, or whatever. They affect people's stock portfolios quite a lot. So having a service like that, really kind of helped me understand that side of how that type of fundamental analysis really works in terms of equities. And an example I would give of this is, let's say when we had the military coup over in Turkey. There's a lot of people that invest in like Turkish bonds, or there are UK stocks, so like oil and gas stocks or whatnot that are affiliated with Turkey. And the share prices would drop very quickly. Like I think Dhall Energy at the time had a big affiliation in Turkey and things like that. It does affect stocks quite a lot. So that was an interesting job I had. So now I own a company which is FX Daily. This is a real-time news service. I work for the Society of Technical Analysis, so I give some lectures at the London School of Economics. But I also manage and look after some of the content that comes in that they then post out. So on the editorial side, TradingView, which is the charting company, I write for their premium clients, but I'm also kind of a UK ambassador. And lastly, obviously, London South East. So here I write a lot of the blog articles and a lot of the market analysis content for them, and try and help everybody there kind of understand what's going on in the financial markets from my point of view, especially economical and political. And then lastly, what I'm going to be doing moving on is we're looking to introduce some kind of FCA regulated reports. We've gained FCA regulation now to basically push our ideas and our investment advice. So it's an advisory product moving forward that we're going to give people, and it does use some of the actual tools that I'm going to show you today. So you will be able to see how some of that works. So who's this presentation for? So traders who trade both long-term and short-term. Now, for this particular talk for the demographic of the audience have gone slightly longer term, but these techniques can be used in exactly the same way for shorter term traders. But it's really about kind of avoiding stocks that you shouldn't be looking at, how to identify certain stocks in particular trends and in particular sectors. So pension fund managers and long-term investors, like I said, so they kind of read my commentary and my company's commentary to kind of keep abreast of what's going on in politically, financial markets, economics, etc. Where we are in the economic cycle, where we are in rate hiking cycles, central bank stuff as well. We kind of post out quite a lot. We're known for that. Short-term traders in FX and commodities. So the commodity side of things is probably more important for this because if you're looking at companies, like Cas Minerals or companies that are, or oil companies that are specifically weighted to the commodities, the screener could be used to point out undervalued stocks in that particular sector. So that's why the screener that I'm showing you will work for that. Now, like I said, so some parts are very easy to understand. So obviously, I'm not aware of everybody's competence in technical analysis. So I've made some parts a little bit easier. But then, obviously, if I can talk you through it, some of the points do get quite technical. So if you do have any questions, let me know. And then sector and asset class rotation. So this is key to my thought. So now I've been working in the financial markets for about 10 years or so. The flow of money and how the track of money going around the world into different asset classes, into different sectors, is very important for me. So I've noticed over a very long period of time, you often see a general paradigm shift moving from market to market, moving from asset class to asset class. And a big example of this, as you guys must know, is when the introduction of QE came across, what happened to gold prices and equity prices then. So when QE came in and governments were buying bonds and whatnot, you saw interest rate yields drop dramatically because of all of the buying, but stocks, obviously rose significantly in that period of time. So that, for me, was a paradigm shift in its time. Now we might be moving away from that paradigm shift. I'm looking at other ways that you can profit on the other side of that, if that makes sense. So, and unfortunately, politics come into play. I really like speaking about what's going on with Russia, what's going on with Donald Trump or whatever. But if we like it, however we like it or not, it does affect all of our investments and our portfolios. So that's why I look into that. And in terms of monetary policy, I more look at interest rate differentials, where the market feels like interest rates are going, because that obviously has a big effect on equities. So that's why I talk about that. So, getting into now the talk. So how can technicals help? So any of you that have seen any of my talks in the past, I really look at how to order stocks, and I kind of look at it like a league table, so like a football league table. So, if there are very good high-performing stocks and they're at the top of my league table, are they overvalued? What's going to make them continue to keep growing? Is there a point in which they might fall off? That's a very key point for me. And on the other end of the scale are some stocks that have previously been bad, like trying to get their act together now. Are they improving? What are the technical indicators showing me that they are improving? I suppose an example of this would be Balfour Beatty, the construction company, BBY. They've recently turned their ship around, and it looks like they're getting a little bit better. So my screener helped point that out to me. Finding value in stocks. So there are some stocks that are significantly undervalued compared to something like asset class and book ratio and EPS. So how can we identify, compared to some companies' market cap, what their asset valuations are like, and how can you compare this and possibly what their growth ratios can look like? So that's another very, very good way to use technicals. And a lot of people just think of using technicals on a chart and just using it for price information. You don't only have to use technicals for price. You can get a chart of an EPS growth. You can get a chart of book ratio, of asset ratio. You can get charts of all of these things now on many sophisticated platforms. So technical analysis isn't only just about looking at the price in this particular asset class you're looking at. You can use technical analysis in the nuances of the particular companies, which is very important. So timing. So this is obviously, everybody knows this is the hardest part of investing. You might find the best company in the world, and they might be doing absolutely amazingly. But if you invest in them at the top of their cycle, regardless of how well they keep doing, the market consensus might mean that they fall off. And I'm sure all of us have fallen prey to this in our particular time. So this is how technical indicators can help. So finding stocks to avoid. I make a general rule, companies falling off a cliff, you know, like Interserve or whatever, you know, there's a few big companies that have fallen really heavily in recent times. You can't avoid sometimes companies lying about their balance sheets and their books, but what you can find out in the volume is whether internals are selling. So Steinhoff over in South Africa, the owners of Poundland, if you ever look back at their chart, there's an indicator called on balance volume. And 6 months before that share price fell off a cliff, you saw massive amounts of internal selling there. So really, it could help you avoid picking bad stocks. You know, some of these indicators are very good at looking at things that you might not necessarily look at doing traditional research on stocks, you know, going through balance sheets, etc. You don't get some of that information, but you can pick it up using technicals. And then systems help to avoid mistakes, and I mean this in regard to emotional mistakes. Now, obviously, I'm not talking about just like high-frequency trading or anything like that. I'm talking about if you have a system, let's say for like tracking value, or you know, moving your stop loss up when you're in profit. You know, systems can really help you avoid, you know, potential collapses in stocks if, for example, you know, you're in them and, you know, maybe a catastrophic event happens. So testing, this is key for me. So I backtest a lot of strategies. So I used to develop trading strategies, and backtesting them to making sure they're robust is 100% key. So if you're using technical indicators like a MACD, RSI, or anything like that, and you have a chart that has like a replay system, so some trading platforms, you know, and I'm not here to sell any of them, but you know, they come with replay buttons where you can set your parameters of stocks that you want to pick in the past, and you can click the replay button for, let's say, this year, and you know, it will play it out, and you can work out whether that particular system worked on that particular stock, and also on a group of stocks. So, for example, you can put your parameters in and set the same system on a group of 100 stocks and see if it works in that sector, for example, or in that country. So, having a good trading system is a must, and one that can help can let you backtest is also very important as well. Find out what indicators work in different situations. So this is also very, very important. So what I mean by this is trending situations versus range-bound situations versus downtrend situations. How do you know, personally, where to put your money when something's in a sideways market? What markets are trading very well when the market's moving sideways? Even when the market's moving down, what's trading very well? And then a good example of this is in a very horrible market crash, you know, since that we had recently. Companies like, you know, Poundland, Audi, Lidl, you know, those kinds of companies did very well in that time. So, you know, how do you find them in a downtrending market? And a stock screener is a very good way of finding outperforming stocks in bad situations. So, which ones work in the best combinations with each other? And what I mean by this is, like, don't use a moving average, like a 200-day moving average, with like a MACD indicator, because they're going to tell you exactly the same thing. So don't use an indicator based on moving averages with another indicator based on moving averages. It's not going to make any sense whatsoever. So a better one might be to use a volume indicator with a MACD indicator, or, you know, an RSI with a MACD indicator, or a stochastic with a MACD indicator, because effectively, they're not all going to be confirming the same thing to you at the same time. Chart types, key for me, again. So, you know, everybody seems to be using candle charts at the moment. We see them absolutely everywhere. We see line graphs everywhere. But, you know, again, this is just pretty basic price information. Although candles can give you a good idea on sentiment, market profile charts are very good at determining value. That's very good key here. It looks really different because normally you have a chart on a time versus price axis. Market profile, it doesn't do that. It squeezes all the price together for you to work out where potential overvalued and undervalued zones are. Renko charts and point and figure charts also are non-time based charts. So point and figure charts can help you work out value distribution levels and when something's breaking out of a value point, which is also important to me. And Renko charts will basically kind of smooth price a little bit more and can help you work out when something might be turning, right? So I'll explain some of them as we go forward. But if you do have any questions about them specifically, you know, you ask me at the end, come and find me. I'll be happy to talk to you about it. So getting started with the actual nitty-gritty of what we're doing. So market breadth. So this is relative performance compared to like I've given examples here of the FTSE 100, 250, AIM, but also even the sector. So you could have the FTSE fall on a particular day, but you could have 10 stocks, outperform the rest of them, or not fall as much as the rest of the FTSE 100 in that particular day. Now, for me, what would that tell me? One, that they could be robust stocks. Two, that they might perform well in bad situations. And three, there's got to be a reason why investors might be holding those stocks while the rest of them are selling off. Now, they're important things to look out for, especially, let's say, for example, FTSE 250. If we talk about, now I'm going to speak in a second about spread bettors, so I won't talk about it too much, but as the ESMA rulings are coming in for spread betting companies and leveraging is changing for spread betting companies, there are one or two stocks there that have really outperformed the rest of them when the others have fallen because they're not keeping up with the regulation changes, but there are one or two that are actually changing their ethos, they're changing their leveraging strategies for their clients, so they're performing well, and you're seeing maybe client migration move towards some of those brokers or something like that. That's not really my concern. I don't really focus on them fundamentally too much, but the technicals are telling me that. So using market breadth to work that out is very important. So relative performance compared to sector. So I've got a chart coming up for this, and an example that I can give you straight off the bat would be oil companies. So when oil prices were crashing really heavily, they were falling, nobody knew when they were going to stop or whatnot. If you use market breadth, so you look to find certain stocks that are performing well against the ones that are falling, that can really help you and identify good stocks in a sector that you might think has potential growth when it bottoms out. So for example, when oil prices did bottom out, if you found a couple of stocks that didn't fall as much of the rest of them, that shows that they might be in pretty good stead for when the market rebalances and comes back up again. So something like that's also very important to me. So how technicals can help. So this is how I use the screener. So how many companies are above the 50 RSI 50 rather, on a 14-period RSI, the MACD, stochastics, and maybe over a market cap of 3 billion sterling. So a screener can help you identify that. And this one is one that I've put up on here. So this was on Thursday, so this week just gone. So how many stocks are over a 70 RSI rating? So that's on a 14-period RSI, and they are over £2 billion worth market cap. So this shows you. So we had Sky. They've obviously been outperforming recently due to mergers and acquisitions coming up and whatnot. So there's potential takeover there, which means they're right at the top of the list here because their RSI rating is really high. Pearson, we've had SPX, we've got UBM, Metro Bank, also very, very well performing at the moment. Hikma Pharmaceuticals at the bottom there, which had a really decent set of fundamental data come out quite recently. So this shows you on this particular day what is going on in the market. It gives me a quick snapshot. So I literally quickly just put my parameters in there, which is, are you above a 70 RSI on a 14-period, and are you over 2 billion in terms of your market cap? And that will just give me a very quick snapshot of, okay, maybe if I think any of these potential companies are going to keep going, I'm going to start researching those companies. So that's the first part. So this is the one at the bottom. There on this screener was Hikma. So I decided to pick this one to show you guys. So Hikma Pharmaceuticals versus the FTSE 100. So me screening this, so this is market breadth exactly. So you can see at the end of the candle chart, right on the left-hand side, or on the right-hand side if it's you guys, you can see it's pushed up quite a lot. And you can see what's happened to the general stocks in the UK through the FTSE 100. It wasn't really inspiring, but Hikma did move against the FTSE 100. So the FTSE 100 is in orange, and the Hikma Pharmaceuticals price is at the bottom in the candles. So you've got to ask yourself that day, well, if the rest of the stocks in the country are underperforming, why on earth have Hikma moved up? And it was because they had a decent fundamental announcement on that morning. Yes? No, it's not, but it's in relative terms to the country, how the country is performing, like the best stocks in the country. So this answers that question, is how are Hikma performing against all of the big other pharma companies in the country? So what I did here is you've got Hikma the same price at the bottom, and you can see over the last calendar year, they have been significantly underperforming. So in terms of the sector in pharmaceuticals, they're not a very good company at the moment, are they? Like, obviously, they're at the bottom of this list right here. And then you can obviously, in blue, you've got Shire, who are next. In orange, you've then got Glaxo, and then AstraZeneca at the top, who are in green. So there's just, putting those simple parameters in gives me a quick snapshot of who are the best and worst pharma companies at the moment that I'm looking at. I haven't got them all in there. I've just made this bit simple so you guys can notice which one's which. So if I then think that the pharmaceutical sector is going to be rampant in the next few years, I'm not saying that this is my belief, but if I do believe that, which one out of those, in terms of a value point of view, am I going to invest in? It's going to be Hikma. They've made a significant turnaround there at the end of Thursday's session. They're slowly catching up in terms of relative strength to the rest of them. And if I feel like the sector is going to keep performing over the next 18 months or whatever, or it's undervalued at the moment, I've got a list of stocks that I'm willing to look at. Okay? So setting up your screener. Now this is the important part for anybody who wants to use a stock screener. Yes, got a question? Yep, go for it. Yes. They do. Yeah, but I would implore you to do some back testing on this theory and on different time frames. So because I worked in statistical analysis, I checked trading an RSI above 70 on a daily time frame over a 5-year period on 50 stocks in 4 different countries. Okay? Now what happened was when the RSI did go into overvalued area, yes, it did pull back when it dropped back below 70, but I would probably say more than 68% of the time, it kept going in the upward direction. So don't take indicators for face value. Okay? Don't use them individually to give you trading signals. You have to confirm them with something else. And that goes with a lot of them. If you try and back test like a MACD system, it's going to lag price heavily, and you're going to lose money. So don't take MACD at face value by itself. Don't take RSI face value by itself. That's why I used this one. So I used the RSI for Hikma because I wanted to know which stocks were recently performing well that are generally bad. Yeah. So that's why I did it. No worries. So setting up your screener. So like I said before, overvalued and undervalued stocks. What trend are they in? Which is very important. Have they pulled back from the trend? So this could tell you has the market underpriced them compared to recent valuation? What indicators can help with this? So the examples are on the next slide. So over here. So this is a very different screener. Some of you guys have asked me a couple of questions about something similar already. So this is UK stocks only. Market cap over 2 billion sterling, and this got year-to-date performance ranked. So on the year-to-date performance, or the 1-year performance rather, you can see that this has got which ones have performed the best, and only the best. So this is the top performing stocks that I have in this particular list with these variables. So I've got Ocado, GKN, Sky, Evraz. Fever Tree is one that I've definitely been on my watch list. Royal Mail as well. I've been doing very well recently, and this gives me an idea, and I'll let you in on a bit of a secret here, is that let's say, for example, I've got a very good 3, 6, and yearly performance. Yeah? If I want to find something that's going in an uptrend, and I'm looking at a 6-month and year-to-date performance, and I can see on the chart it's moving up, what I want to find is performance over the week and over the month. Has it pulled back? Because the fundamentals of the company might be good, everything about the company might be going well, but people could be profit-taking, or something like that. So I can then identify very, very quickly a stock that's been trending for a long period of time, but has pulled back, let's say, 5 or 6% for me to go in to see if it can retest its highs. Yeah? So that's a very quick way and a very simplistic way of me finding near-term undervalued stocks in long-term trends. Yeah? Cool. Moving over to the next slide. So now this has got a bit of a variable in it. So what you can personally do. So I've got UK stocks here, 2 billion market cap. Now they're rated on a 6-month performance, and I've only put financial stocks in here. Now, why would I only use financials, or why would I separate the sector? So if I think now we're going to be in a rate hiking cycle for the next 2-3 years, and interest rates are going to start to become higher, we're seeing treasury yields come higher, gilt yields come higher, or whatever yields you might be looking at, financials, in my view, are going to perform slightly better than companies that are going to do badly in a rate hiking cycle. So I might look at financials for the next 18 months based on that fundamental opinion that I've made. Yeah. So what I mean by this is you guys might love the automotive sector, and you might want to set up a stock screener for automotive, like, you know, BMW, Daimler, General Motors, or whatever. And you could think that, okay, well, I think electric cars are going to take over, and I think the automotive sector is dead. So you then could use the screener to then find out which ones are undervalued and maybe producing the most electric cars. Okay? So moving on, this is the same table as before, but this is now a 50 RSI, and this could be changed onto any indicator on any time horizon. So whatever indicators you like to use, you can set up a stock screener to do that based on there. But this particular one is stocks above a 50 RSI. So what's the point of this? So how much quicker is this than looking at all the single stocks in the UK? So, you know, there's loads and loads of stocks. I cannot be bothered to look at all the fundamentals and, you know, go through all of the charts or whatever. So I'm going to use stock screener to do this for me, and it'll give me this in like 2 or 3 minutes. And then I'm going to do further due diligence once I've used the stock screener. I don't invest blindly just using the indicators. I'll use the indicators to find the stocks, and then I'll look at them more deeply. Momentum indexes. So what I mean by this is it creates a league table. So if a stock has moved from mid-table all the way up to like the top 3 or the top 4, I'm going to track that stock. I'm going to see why is it moving that quickly, and, you know, the screener can help me with that on a day-to-day basis. Filter out good or bad stocks, like I've said. And where do we go from here? So this is a technical chart of one of the companies that I've been looking at recently, GVC. And you can see gambling companies are under real extreme pressure. You know, there's a lot of rules that are being changed in the gambling industry, but these guys are 90% based online, so they don't really give a crap. So I then tracked this company. It was at a high there recently, and that's when it alerted me to my screener. So I literally just waited for a pullback. None of the fundamentals had changed in that period of time, so I bought the stock when it hit the trend line, and it hit this value area. So I looked for confirmation elsewhere, but the stock screener gave me the idea for the trade. Yeah? Moving on, trading and building a portfolio. So relative rotation, so sector rotation. So you can use a sector screener. So say which sector is performing well today. If copper prices are going up, look at the miners, Anglo, BHP, all of that kind of stuff. So you can use a screener to work out which stocks are rotating where. Like in trouble at the moment, we've got the spread bettors and the home builders. So this kind of identifies me not to use them. So on my sector screener, I'll see that those companies are all underperforming for the last couple of months, and I won't touch them. Yeah? Companies that are being too reliant on a strong sterling. So Dixons, for example. On my last talk here, it was either here or at the STA, I identified Dixons as being too correlated to the strength of the pound because they import most of their goods. And subsequently they fell. So you can find out through the screener which ones are too reliant on what kind of companies or other asset classes. Energy sector is another one that I've been looking at because of tariffs in the UK. Mining sector outperforming recently because of where we are in the economic cycle. Also, the indicators can really help me separate the good and the bad stocks from the bunch of the sectors as well. Now, combinations of these screeners can also be very powerful. So, for example, if you've tested all the financial stocks in your financial screener, but then what you do is you take away the top 3 best performing, you've got a recipe for success there. So combining the indicators is also very important. And then also long-term versus short-term. So you can do a long-term screener versus a short-term screener. Don't forget that as well. And then we've got here, like most commonly used thing that I see on Bloomberg, CNBC, everything, is where is stocks trading in relation to their 200-day moving average or their 52-week average. It's not the be-all and end-all. That's not the only thing to look at. Try and cut them maybe into quarters, into half years or whatever. That might also help you and throw up some very different signals as well. So lastly, trends, how to identify trends. So this is based on the screeners. So you can have 6-month top performing, 6-month underperforming, and work it on there. So that could really help you. Overall indexes. So what I mean by that is like the FTSE. You can see it's dropped back quite a lot, but there are some very good stocks that have performed well while it's been falling back. So that's another tip there. So are we in a period of higher highs, higher lows, or lower highs and lower lows on the chart? That's the first thing I would look at in terms of trend. Well, can you identify, if the stock or the index is trading well just by staring at the chart? Also, if you can't tell, I use the MACD on a longer term chart to try and identify the trend, so I've already spoke about that. And if in doubt, just there's no need to stay out. I mean, to trade for the sake of trading. That's one piece of advice that I would give everyone. Just because you've got money there, it doesn't mean that you need to invest. Just take your time, select your stocks properly, use good trading tools to find good stocks. And then lastly, stock market corrections and cycles. So, are we in a correction now? Is this at a certain part of the cycle that we're in? That's also very important, and the screeners can help you work that out as well. And this is also fine. So like we've broadly spoken about these working in an uptrend, but you can do exactly the same thing in a downtrending market. If the market's been downtrending in the last 3 or 4 weeks, only use that time horizon and then change it up from there. And then lastly, just quickly, always have a fundamental bias. Okay, so I know I've spoken about technicals a lot, but sentiment is very important. If the general market sentiment is bearish, don't look for stocks that you're going to keep going long on all the time. Let the market's going to win at the end of the day. So let the market decide and work out what your own fundamental bias is. And if you do feel uncomfortable in a trade, don't be in the trade. So this is, like I said, regardless of the asset class. So paradigm shifts in macroeconomics I spoke about at the beginning, and that's very important. Are we moving over to emerging markets again? Has the money moved back over to the West? What sector is it particularly moving into? Is it moving into commodities? Is it moving into financial stocks? Is it moving into retail? Really look at track the flow of money. And in regards to politics and stuff, there are also trends as well in terms of if, for example, this really does kick off with Russia, how much Russian money is going to pull out of the London markets? What could happen there? There's a lot of money in property and physical asset classes in those places. And a lot of South Africans, Russians, they hold a lot of money in the UK in terms of physical assets. If it did kick off, would they pull it all off at one time? Something to keep an eye on. And like I said, we spoke about sentiment. And lastly, just this system does work in all asset classes. So it works in FX, it works in bonds, it works in stocks rather. And you can really use a screener in all different asset classes to pick out potential investment opportunities. And thanks for listening. Once again, just read my blog at London Southeast if you like what you heard today. I do use the level 2 data a lot, and last year I did the seminar on level 2 data, so you can find that on YouTube, and it can tell you how I use that in conjunction with this. And I do use London Southeast level 2 data to show me the volume of stocks. Also, we got market reports and snapshots on London Southeast. Like I said, if you want to talk to me about the regulated advisory services, please come and talk to me about that. And you can follow me on LinkedIn and on Twitter if you like anything that you heard today, and you can contact me on there. All right, thanks.